All right, so here's a bit of a market update. We all know that Bitcoin has basically rolled over. Actually, rolled over twice, and it looks like may have found some footing and trying to establish a new level of support and trying to kind of range back up. So let's understand what's going on here. So I'm on a 4-hour chart, and look, this pattern here was due to break. It was as we talked about, a ginormous rising wedge. They're typically they're bearish patterns. At some point, they're going to break, and they break down. They break heavy. We were also seeing what was called bearish divergence going on. Remember that? And Bitcoin just kept on going lower. I typically do not like to trade when Bitcoin is not looking strong. And that chart of a rising wedge, you also got it met with, at least on a 4-hour, then the daily also had a bearish MACD cross. So these were your sell signals. This is how you're able to sell in here. And you didn't catch any of this. You didn't catch any of this fall. I mean, just being in that alone, you were taking huge hits. Off the top of this candle, you sink on down. I mean, you rode this down for 21%, a 20% loss. There was no need to do that. And this is where retail and smart money just separate themselves. Smart money or institutional money was selling here. And guys, I'm not sure if you read the recent report of Tesla, but Tesla said that they sold 10% of their Bitcoin. They're there to make money. They're smart money. Retail buys this stuff, hodls, and thinks that it's going to go up forever. But that's not how it's going to work for us, because again, we don't have these major dollars to play with. We have to kind of buy and sell to increase increase our position size. So when we see 10% gains, 50% gains, it's better than a couple $100. You start rolling to a couple $1,000, and that's really where your gains start to compound. That's where you compound your gains. Again, not financial advice. However, this is how we would trade if you wanted to do that. Now, Bitcoin dropped down. This was a bearish pennant. Why was it a bearish pennant? Because you had a drop, you had a pennant formation. You had a pennant formation where the flagpole was dropping down. So that's a bearish pennant. They typically break lower, and it did. We had another bearish pennant that broke lower, but however, the bulls came up and bought this. They bought this right up. Went down to about 47K, which was one of our drop targets, between 46 and 47K. Didn't quite reach 46, but it came close. You can kind of say this is about probably a double bottom somewhere around here. A very weak one, but a double bottom. And now Bitcoin is ranging. So this is what's called a volume profile. This kind of tells us where our buyers and sellers are. And you're going to see that this area here is going to be a lot for Bitcoin to break through. You have a zone here of resistance. Well, this is all right. We want Bitcoin to hang out in this zone. The longer it hangs out in this zone, like it hung out in this zone all along through here, you can see this is where Bitcoin likes to range before it explodes up. It could range here for a month, it could range here for a couple of weeks, it could range here for a couple of months. I have no idea. However, I do know this is where Bitcoin wants to range, and it is going to. Why is this great? This is great for altcoins. So why? Bitcoin dominance, death cross, still trending down. That means the money is flowing out of Bitcoin and flowing into altcoins. For altcoins to explode, you need a ranging Bitcoin with a decreasing Bitcoin dominance. That is what you want for altcoins. However, if you're more of a Bitcoin person, this might be an area where you start accumulating some Bitcoin. Because everyone likes to buy Bitcoin as it reaches all-time highs, and that is not when you buy. You have to counter trade your emotions in this market. You learn to counter trade. This is where your gains start to compound. This is when you start pulling out when everyone's buying. and you start buying when everyone wants to sell. And that is how you keep compounding your gains. If you're just going to hold your stuff and hold on forever, you're going to ride these waves up and down. I typically don't like to do that. I typically like to take some profits off the table and rebuy on any sort of crash or correction in the market. And this is why volatility trading is phenomenal. So our Bitcoin dominance is still trending down. Again, altcoin season. Altcoins are at all-time highs, blasting through all-time highs. Let's look at our leader in the altcoins is Ethereum. I posted this macro trend line not too long ago on Ethereum, and back in January it started. It respects this trend line. That's what Ethereum has been doing. This has been your buy zone. If you want to buy Ethereum, I would wait for the pullbacks to here. As you can see, exploded up, rode, explode, came right back down. Rode up, came right back down, right back down. This is where your line of buyers are. Your buyers are in this zone. I remember when Ethereum was running up here, and everyone's like, "Oh, it's going to take off." You're not buying up here. You took this, you wrote it, and then you wrote it down. 0 point. This is where your buy zone is. As this rides up, I would continue to accumulate on this trend line. Any sort of pops, may sell some, not the whole position, but some. Reaccumulate down below. What could happen with Ethereum is we're seeming to reach a top here. We got one top here. We have another top coming in over there. Let me show you what I'm talking about. You got a little bit of a top forming here. And you got a bit of a top that's probably going to form right over there. We need Ethereum to blast through this top. Blast through this top, it's in open air. But however, usually what ends up happening is we actually had a run up, came down, run up. You might get a range in this zone where it starts forming like an ascending triangle. And then on its third or fourth shot to the all-time high, that's when Ethereum tends to take off. So don't be surprised if that's what goes on with Ethereum, which then means on this lower trend line, it's an aggressive buy zone. You buy, you buy, you buy. You're not buying up here, you buy. This is where your smart money is buying on Ethereum. This is where the smart money accumulates, and then they sell. And then they accumulate, then they sell. So this is what Ethereum seems to be doing. Let's look at another altcoin here called Matic. A lot of people are hot on this coin. I think because it's now having issues, it's now relating itself to NFTs. And, well, this is the perfect example of what you do. So Matic rode up, was riding basically in a sense, this is on a daily chart. Let's go to the 4 hour on Matic. Let's see what we got on the 4 hour. Hang on, guys. All right, so let's draw this a little better. So Matic was running basically an ascending triangle. An ascending wedge. Rode in, broke out, broke right back in, broke out. You got these fake outs here. These were your fake outs. Was riding. So this would technically be a breakout, but you don't want to buy. This is a light green saber candle. You do not buy on these. You buy down below. Shot up, now held outside. Now when rising wedges break out to the upside, that's when you get your parabolic gains. And you can see it was starting to form a parabola here. But however, you just got a ton of sellers that came in. A lot of sellers sitting up here. Broke back into the pattern. So you would have bought down here, would have broke out, you would have sold. Now this would have been your retest if you wanted to buy the retest. However, it broke right back into the pattern. Once it broke back into that pattern, you would have had some sort of stop loss setting here. So when it broke out here, you then would have sold. However, let's just talk about how this pattern works. Rising wedge typically breaks to the downside. It did. It broke to the downside and formulated what's called a rounded bottom. I talk about these all the time. I don't like catching falling knives so much. What I like to do is find bottoming patterns. And this, remember, this is called a rounded bottom. This is an accumulation zone. This is an accumulation pattern. This is where smart money is buying into it. This is what you want to see. It's trending out, and you know it's trending out. You start to see a pop, comes right back on down, and it's forming a support zone. Why? So what a rounded bottom does is it formulates a support zone. That's what it does. It formulates a zone of support, a base for you to explode off of. That's what you want. When you go put your next leg higher, this is like building a house. When you put your next leg higher, you want great support for your next leg higher. Otherwise, these things are unsustainable and they crash. So, look, you got your initial pop up, but this was unsupportable. There was no base. Came down, formed the base, and now it exploded for its next leg higher. Right here is the previous all-time high. You're looking to get into Matic. This would be a retest of this, would be terrific. Should it come back down to support, this is another great buy area. Yeah, remember, it's hanging on support here since about March. You got March, almost a whole month of just trending, doing absolutely nothing. This is where patience is key. This is when the market was plummeting and everyone's like, Bitcoin's over, crypto winter. This is when you want to buy. Why? Because this is easy money in a month. Easy money in a month. Let's just say you bought halfway through, you can't shot up. You're talking almost 100% gains. Almost 100% gains was taken in that month. So, guys, this is easy money to be made in these patterns. Easy money to be found. Ton of volatility left. You're talking doubling your patterns. You got to remember, though, the key thing to remember is take some profits. Remember to take profits. I'm not telling you to sell your whole bag. Take some profits, because to ride it up, to ride it back down, to ride it back up again. I mean, yeah, if you don't have time to trade, I get it. But however, at some point, this is all going to be over, and you're going to ride it all the way down. And that's what happened in 2017-18. People became millionaires and then rode themselves back down out of millionaires. You need to take profits off the table, because there's always going to be a pullback. Do not trade with your emotions, trade with the charts.